Everyone. So in continuation with the previous class discussion, so we started with how GST is formed and what are the various types of GSTs and what is the model of GST that we have. Thereafter we were discussing about the position of goods in GST compared with the earlier indirect tax system. So we have two products which will not be coming under the ambit of GST at present. What are those two goods which will not come under the ambit of GST? Alcoholic liquor for human consumption and petroleum products. What are the five petroleum products? Crude oil, petrol, diesel, aviation turbine fuel and natural gas. And we have at present central excise duty on these petroleum products. Upon sale of these petroleum products, CST or VAT will be payable. At the same time, alcoholic liquor for human consumption, on manufacture we need to pay state excise duty, and whenever we are selling it we need to pay CST or VAT, and the CST or VAT will go to state government only. Even though VAT is levied by state government, collected by state government, CST levied by central government but collected by state government. Then we were into the discussion related to tobacco and tobacco products. Tobacco and tobacco products has got a special importance here because not only the old indirect taxes but GST both are applicable. Old indirect taxes, central excise duty we need to pay, whereas GST is also we need to pay. So why, sir? Usually when old indirect tax is there, there is no GST, correct? Whenever we are continuing old indirect taxes, GST is not there. Same way for tobacco products also they should have given that. No, they did not give, because central excise duty, central government wanted to continue to levy central excise duty and GST also been levied. So the price of the cigarettes they want to maintain. They don't want to reduce the price of the cigarettes, because if at all they start levying only GST on cigarettes, then already they are levying a huge amount of central excise duty on that. Then the price of the cigarette will come down if the central excise duty is removed and GST is maintained, because the maximum rate of GST is 28%. So but the rate of duties in total that is being collected on cigarettes was approximately 40%. So now if GST comes, the price of the cigarette will come down. Same is the case of alcohol also. Why central government agreed? They could have convinced the state governments, but why they agreed to that? Because the maximum rate of GST is 28%, but on alcohol approximately 33% is being levied existing. Suppose if GST is levied on alcohol and tobacco, only GST is levied, automatically its price is going to come down. So it is not going to give a good sign to the society. So that's the reason why they continued central excise duty on tobacco and tobacco products, whereas other goods we have only GST but old indirect taxes are not applicable. So therefore from this table, what are the goods which are considered as non-taxable supplies under GST? Non-taxable supplies means what? So on which there is no levy of GST. No levy, not leviable. Okay, what are they? Two: alcoholic liquor for human consumption and petroleum products. Then if you see on import, what should we pay, sir? Should we pay any customs duty on import of these goods? Yes, of course. So customs duty we need to pay on import of all these: alcoholic liquor for human consumption, petroleum products, tobacco and tobacco products, other goods, everything we need to pay customs duty on import. I am talking about only local sale, domestic manufacture and sale. The same list again we will see in customs for the purpose of import, what will be the impact on that. Okay. Now what about services? Do we have any special point like this for service? No, all services are covered under the ambit of GST. Few are taxable, few are exempted, and we need to pay GST in case of taxable. If it is exempted, we don't have to pay GST. Now have a look into this illustration. You need to answer whether GST is applicable or not and what is the reason for that. First, kerosene oil, whether GST applicable? Yes. Why? Because is it a petroleum product or not a petroleum product? Not a petroleum product. That's why, because in the list of petroleum product, if you see, kerosene oil is not there. So due to that reason, so GST will be applicable. So justification, not a petroleum product. Then cooking wine, GST applicable or not applicable? Yes, GST is applicable because cooking wine is not alcoholic liquor for human consumption. Just because wine is there, no, it does not contain any alcohol content. Okay, next time when you go to any supermarket, so there will be cooking wine bottles. Just take that and see, clearly it will be mentioned non-alcoholic beverage. Okay, so there won't be anything in that, don't consume also, it's waste. So it is not an alcoholic liquor, not an alcoholic liquor. That's why GST is applicable. Then LPG, liquefied petroleum gas, GST applicable or not applicable? Applicable. Natural gas is different from LPG. So that's why sometimes at home when parents are spending money on cylinder and all, we should see how the bill is, whether GST is there on that or not, where we will not be bothered anything about our house also. So cylinder, next time at your house, cylinder is purchased, one bill they will give. See the bill, there is GST on the cylinder, okay, LPG. So because LPG is different from natural gas, so liquefied petroleum gas is not in the list of 5. Due to that reason, GST is applicable, so not a petroleum product. Not a petroleum product. Then beer, no, it's an alcoholic liquor. It contains alcohol liquor, but sir, small element only, sir. Small element or big element, irrelevant. It's an alcoholic beverage. So due to that reason, GST is not applicable. Alcoholic liquor. Then cough syrup containing alcohol. Now it contains alcohol. GST applicable or not applicable? It contains alcohol, but not for human consumption. It may contain alcohol. Just because it contains alcohol, so just because it is a dry day, no one will buy 10 bottles cough syrup and consume, they will die, okay. So not possible. So cough syrup containing alcohol, so there is GST because it is not for human consumption. No, I mean cough syrup is for human consumption, but the alcohol present in the cough syrup is not for human consumption directly. So they will be using a high dosage of like concentrated alcohol that is not for human consumption, and it is not advisable also. And some people, without knowing, what they will do is that they want to consume alcohol, so they will take cough syrup and drink, and thereafter completely blackout. It is like their mind will stop functioning, brain dead. People will become brain dead if they consume too much of cough syrup beyond a quantity. So that's why doctors also advise, keep it away from the children. Children should not consume this and all, because unknowingly if they take and drink also, complete brain dead only. So because that much high concentrate will be used in that. So yes, it contains alcohol, but basically it is a medicinal preparation. For that medicinal preparation they are using alcohol, does not mean it is an alcoholic beverage. That's why GST applicable. So GST is there on medicines, yes. GST is there on medicines, but we are all understanding wrongly that we don't have to pay GST on medicines if we are admitted in the hospital as inpatients. For example, there is a medicine on which GST is applicable. That medicine given to inpatients. Who are inpatients? Those who are admitted in the hospital. So then there is no GST on the medicine. You got it? Suppose if the medicine is sold to outpatients. Who are outpatients? Those who go to the hospital for consulting. So to those outpatients, when the medicines are sold, only then GST will be payable on those medicines. You got it? So many hospitals, what they are doing nowadays is that, so for inpatients also they are collecting the GST. So just look out. So next time when you go to any hospital, not for your purpose, for your friends, etc., just analyze the bill. In that bill, so medicine bill, there should not be any GST. If at all they are charging GST on the medicine bill, so that's actually fraud. That's a scam. They collect GST from us, but they will not be required to pay GST to government. Then engine oil, whether GST is applicable on engine oil, Yes. Why? Engine oil is not a petroleum product. Not a petroleum product. So due to that reason, GST is applicable. Engine oil, lubricating oil, 2T oil, etc. and all GST applicable only on petrol and high speed diesel. GST will not be there. Then next we are moving on to the system of credit in indirect taxes. So we need to understand the concept of input tax credit, and this input tax credit or the system of credit is the basic fabric, so based on which the entire GST structure is constructed. So what does it say in old indirect taxes? So when I am making purchases, whatever tax that I pay on purchases will not be fully available as credit to me to set off against my liability. So due to that reason only they merged all old indirect taxes and they created GST, and the main advantage in GST is that whatever is your inward supply means what? Purchases. On that purchases, the GST paid can be taken as credit and adjust against the GST payable on outward supplies. So this is the system of credit. So in simple words, say there is a trader, there is one trader, and this trader is making some purchases, and the value of these purchases is say 1 lakh plus GST, let's take 12,000 rupees. 12,000 is GST, and this trader is also engaged in making sales, and with respect to sales he will be collecting money from the customer. Say the sales is somewhere like 1,50,000, on that the GST will be 18,000. Now this GST on sales is known as output tax. GST on sales is known as output tax. GST paid on purchase is known as input tax. So now what happens here is that this output tax minus this input tax, that is the net GST that is payable by the trader to government. Net GST payable to government is 18,000, which is the gross liability, that is tax on outward supply, minus input tax credit 12,000, that is the tax on inward supply. So therefore 6,000 is the net GST payable. So these purchases can be called as inward supplies. Reason being, purchase is a word used in the context of goods, but service also can be received na? So therefore inward supplies is common, goods and services. Same way outward supplies, so need not be goods, it can be services as well. So therefore a person is having some outward supplies and inward supplies. Now whatever tax, that is GST, paid on inward supplies at the time of purchase, so that GST paid on inward supplies can be taken as input tax credit and adjust against what? GST payable on outward supplies. So therefore the net GST payable will be gross liability minus input tax credit. What is gross liability? So tax on outward supply. What is input tax credit? Tax on inward supply. So what is input tax credit? Tax on inward supply. So tax on inward supply is input tax credit. Don't forget this word. So on your inward supply, whatever tax that you pay, that is known as input tax credit, and the net GST liability is 6,000 rupees. So whether this benefit is given to all the persons who are involved in the supply chain, yes, everyone, but consumer will not be able to take credit. Why consumer will not be able to take credit? Because consumer will not have any outward supply further. He is consuming the goods or services. For example, whenever I purchase all these equipments for the purpose of taking the classes, on these equipments I can take credit because I have a further supply. So I am providing services to you, and you cannot take credit with respect to the GST paid to me. Why? Because you are the consumer. So due to that reason you cannot take ITC. Same way you take a trader, wholesaler will be purchasing from manufacturer. Manufacturer will charge GST, wholesaler will take ITC. Again wholesaler will in turn collect the GST from the retailer. So retailer will take it as ITC. Retailer will in turn sell it to consumer and collect the GST, but consumer cannot take ITC because the entire GST burden is on the ultimate consumer. So journal entry wise, if you see, what is the entry for this transaction? Purchase transaction. Purchase account debit 10,000. 10,000. Okay, sorry, 1 lakh. Purchase account debit 1 lakh. So don't take 1 lakh 12,000 as purchases. Why? Because this 12,000 is a recoverable tax, correct? So even it is in line with your income tax or Ind AS, everything says the same. Whenever you have a recoverable tax, don't add it to the cost. So therefore, this 12,000 should not be added to the cost. So purchase account debit 1 lakh. Then input tax credit account debit. So we are creating a virtual account. It's an asset. It's a current asset, but it is just a virtual asset only because really we don't have, and moreover we are not going to get the 12,000 rupees as it is recoverable in nature. We are just creating as a current asset. So input tax credit account debit 12,000 to supplier, that is to recipient, like person, we are recipient, correct? So supplier. So to creditor, suppose if you are making purchase, already you have made the payment, to bank, so depends whatever it is, okay? So but the entry is purchase account debit 1 lakh, input tax credit account debit 12,000 to supplier account or to bank account, etc. So we will be taking 1 lakh 12,000 rupees. Now input tax credit is showing a asset debit balance, okay? And whereas the sales entry is what? Debtor account debit or recipient account debit or bank account debit. So 1 lakh 68,000 to sales 1 lakh 50,000 to GST payable will be 18,000. So because we cannot recognize 1 lakh 68,000 as sales, the problem with recognizing 1 lakh 68,000 as sales is that 18,000 rupees is not actually your income. So therefore you should not recognize that as your income. Only 1 lakh 50 is your income, whereas remaining 18,000 is your liability. So you need to create a liability, that is GST payable. Liability usually shows the credit balance. So now input tax credit shows the debit balance, asset, and GST payable is your liability, that shows the credit balance. Now you need to cancel the credit balance. So you will make a debit. So GST payable account debit to input tax credit. This is the set of entry. Understood? GST payable account debit 18,000 to input tax credit 12,000. So remaining 6,000 you have to pay out of your pocket. So to bank account 6,000 rupees. Understood? So in other way, like cash flow wise also you can understand this. That is, I am getting from the customer 1 lakh 68,000. In that 1 lakh 68, 1 lakh 50,000 rupees is my money. So I will recover that. So what is left with me? 18,000. In this 18,000, at the time of purchase, I invested 12,000 for tax. That is my investment. 12,000. Now I will recover that and I will keep in my pocket. Are you getting this? 1 lakh 68, 1 lakh 50 is my sale price. It is mine. And 18,000, 12,000 already I paid at the time of purchase, now recovered. So 12,000 I will recover. What is left with me? 6,000. So that 6,000 I will pay to government. So that is the logic here. Understood? However, with respect to few inward supplies, we cannot take ITC, and that is called as blocked ITC, blocked credits. So, but in old indirect taxes, we had the positive system. It is like only these you can take ITC, and remaining cases you cannot take input tax credit like that. So, whereas now they are telling if you are using it in the course or further ends of business, means it has a nexus to your business, happily you take the credit. So don't bother about whether it is present in the finished product or not present in the finished product. Is it directly linked to the outward supply or not? Don't bother. Is it related to your business? Yes, happily you take the credit, unless otherwise it is specified in the blocked credits. Okay. So that is with respect to this credit system here. Indirect tax shall be levied on every transaction. The originator of the transaction shall pay indirect tax to government and recover it from the recipient. So indirect tax paid at an earlier stage is available for set off against the indirect tax payable at a later stage. So this indirect tax paid at earlier stage is known as input tax credit. Okay. And Suppose if I have excess credit, what I can do with that excess credit? For example, I have made purchases 1 lakh, but not entire purchase is sold in this month. So maybe only 50,000 rupees is the sales. Now in that case, 50,000 into 12% GST if you take, so that is what, 6,000 rupees is only my liability. But how much is the input tax credit I have? 12,000. Now 6,000 is only my liability. Still I have some 6,000 of excess credit. I will use input tax credit for payment of my liability. Still I have excess credit. What I can do with that? I can carry forward. How many years? Indefinitely. There is no time limit. It's not like set off and carry forward of losses. So there is a limitation in income tax. So always our subject is supreme here. Okay, see how many benefits we are giving. So like we can carry forward for indefinite period. There is no death to input tax credit unless the business is shut down. If you cancel the registration, then the input tax credit is lost. If you transfer the business, means if you ensure the going concern, the input tax credit will continue. For example, if I transfer my business to you, I can transfer the ITC also, because this input tax credit is like a current asset. So when I transfer the business to you, all assets and liabilities I transfer, right? So along with that input tax credit also I can transfer to you. So therefore from my electronic credit ledger to your electronic credit ledger, it will come. So we have a process for that. So which means that input tax credit is really a benefit, and we can carry forward and set off against our liability for n number of periods. But just because you kept the input tax credit in the ledger, you will not get any interest on that. Don't expect any interest on that. It's not like a bank fixed deposit and all. So you will not get interest on that, because many people were asking me, so we can withdraw that and deposit in FD, because clients don't know all those things now. They will think that it is like their money which is available, in some bank account it is there. So they are asking, where we have lot of credit, sir, like somewhere 40 lakhs credit is there, why we need to keep it? So we can withdraw that and we can put it in share market or FD and all. Half-baked knowledge, what to do, okay? So we have to answer all those queries. So how we can withdraw here? We will get refund from the input tax credit only in 2 cases. Just like that, you cannot withdraw, you cannot get the refund. Sir, I have excess balance, give refund. That is possible only with respect to your cash ledger. This electronic credit ledger and electronic cash ledger, which will be maintained by the GST portal on behalf of every registered person. Cash ledger, whenever you make a deposit for payment of your liability, that will be there in cash ledger. Cash ledger balance excess you will get as a refund, but credit ledger balance and all, if you have excess, you will not get refund. You can only carry forward. Basically, refund from credit ledger is possible in only 2 cases. What are those 2 cases? Number 1, if you are making zero rated supplies. Zero rated supplies means exports or supplies to special economic zone. In that case, you will get the refund from the credit ledger. Or inverted tax structure. Inverted tax structure means the tax rate on outward supply is less than the tax rate on inward supply. For example, I am making garments for defense, and these garments for defense, uniforms, etc. will be taxable at 5%. But the cloth which I purchase will be taxable at 12%. So therefore, the rate of GST on outward supply is less than the rate of GST on my inward supply. So by default, I will have some input tax credit balance. So there they are giving the refund, but otherwise we will not get the refund from the credit ledger. So the balance, whatever is there in the input tax credit, you can carry forward and set off against your future liability. That is this. What if there is a deficit? Of course, we will make the payment by cash. That's what we have seen in this example. 18,000 is our liability, 12,000 rupees is the input tax credit. So the difference is 6,000 rupees. That 6,000 rupees we are making payment by cash. Then, so is input tax credit being followed properly or not? Not followed. Not followed. That's where the price of the goods has not come down. If input tax credit is properly followed, the price should have come down, but it has not been followed properly. Okay, so I'm just giving you an example to understand that only. So see this illustration. There are 3 dealers A, B and C in the value chain of supply of goods. Assume the tax rate as 10% in each case. the value addition made by A is 100, B is 50 and C is 30. Determine the total cost on consumer D if there is no credit system and if there is credit system. Let's take a scenario if there is no credit system. Suppose if this input tax credit is not there, what would have happened? So first A will be making sale to B. What is the price at which A will be making sale to B? 100 rupees. And on that A will pay a tax of 10 rupees, 10%. And 110 rupees he will collect it from B and 10 rupees he will remit to government, and B's cost will be 110, not 100, because the 10 rupees he cannot take as credit. When he cannot take as credit, which means that will be added to his cost. So 110 is his cost, and thereafter what is the value addition made by B? 50 rupees. So means how much he will fix as sale price? 110 plus 50, 160 he will fix as the sale price. On that 160, 10% will be 16 rupees. So 176 he will collect from C. And again C cannot take any credit. So C will be having cost as 176 and he makes a value addition of 30 rupees. So 176 plus 30, 206 rupees will become the sale price. And on that 10%, 20.6, which means that 226.6 is what they will collect from the consumer. So what is the cost to consumer? 226.6. And what is the revenue to the government? If you see, first person A paid 10 rupees, second person paid 16 rupees, third person paid 20.6. So 10 plus 16 plus 20.6 is what? 46.6. 46.6 divided by what is the total value addition made by all? 100, 50 and 30, means the value of the goods is only, so 180, correct? 180 only the value of the goods. 100 plus 50 plus 30, 180. So 46.6 divided by 180 into 100, if you see, the effective rate goes to 25.88%, but the rate of tax given is 10%. But effectively it is going to 25.88%. Why is it so? Because of the cascading effect of taxes. What is the meaning of cascading effect of tax? So whenever the same amount is taxed more than once, whenever the same amount is taxed more than once, every stage if you see that 100 is getting taxed, correct? The base 100 is getting taxed in the hands of A, in the hands of B, in the hands of C, all three people. And thereafter value addition of B is again getting taxed in the hands of C also. Am I right? Then tax on tax is also there. For example, A has collected 110. In the 10 rupees is tax, but the 10 rupees is included in value, because of which again there is tax on tax. This is known as cascading effect of tax. So cascading effect of tax is because of two reasons. Reason number one, same amount will be taxed more than once. Number two, tax on tax. To eliminate this cascading effect of tax only, they brought in the system of credit. So because if this cascading effect continues, the rate, even though namesake 10%, but effectively the revenue to the government will keep on increasing. So then good only na sir if revenue to government increases. Too much revenue to government is also not good. I am not talking about government perspective. I am talking about general public perspective only, because we will try to evade. See, why in developed countries people will not evade? Honestly, they will pay. Majorly they will pay. Of course, see, this variation of 10% will always be there, any country, but majority will pay, not like India. In India, we all think of, how to escape from payment of tax, because of the huge burden that we have. Because in foreign countries and all, GST is a single digit number, 5%, 4%, 6%. Now no one will have problem. Na? So for example, if I am giving you an option, you pay by cash, no GST, you pay by any other mode with GST fees. Okay. Now what you will prefer? Sir, cash. Cash. Okay. Of course, I am not collecting cash. So I am just confirming in the camera, I am not taking cash. Okay. So then someone will record it and put it somewhere. No, cash not allowed. Okay. So I am collecting with GST and I am honestly paying GST to government. So what I am trying to convey is that every person will feel the pinch. 18%. Why should we pay? Suppose if the rate of GST is 4%. Okay. So even if I tell pay by cash, you will say, okay, no issue, sir, I will pay by account transfer only. So because 4%, because you can show that as your expenditure and everything will be accounted, you yourself will encourage the transaction. See, this is where, India has to learn by reducing the government revenue, and that's where, really they have thought about it. If you keep too much of taxes, so people will not pay, they will try to evade. So instead we need to reduce the tax rates, but tax rate reduce, then again that will become a huge problem. We cannot all of a sudden reduce the rate. So a via media we should make. So first thing what they did is that, so let's try to eliminate the cascading effect. So they gave the credit system. When they gave the credit system, what happens? You see the next table. A, no change. A, no change. A will be collecting the same money, 100, 10 rupees, etc. But for B, it will change. For B, the cost is 100. Why not 110? Because 10 rupees, whatever he has paid on purchase, he can take as credit and he can adjust with his liability. So which means it's a recoverable amount, so he will not add it to the cost. So only 100. And what is the value addition made by B? 50. So 100 plus 50, 150. And on that 150, what is the rate of GST? 10%, 15 rupees. But they will not pay 15 rupees to government. They will pay only, B will pay only 5 rupees. Why 5 rupees? 15 minus 10. So 5 rupees only will be paid to government. So therefore, the cascading effect is eliminated. Literally, what is the value addition of B? 50. What is the tax paid to government? 5, which is 10% of 50. Got it? That's why GST is a value added tax. You understood? So why GST is called as a value added tax is because of that reason only. So GST is not something new. So it is the same old value added tax. So it's like old wine in new bottle, they say, na, the same thing. GST is not a new tax law and all. So no one can take the credit of GST, like we only launched GST in India like that. No one can take credit because it is not new law. It is like various old indirect tax laws. They have just put in one mixie and they have grind it. That's it. So it is not at all a new law. So therefore, the same value added tax principle is retained here. If you see what is the value addition of B? 50. Effectively 50 into 10%, 5 rupees only being paid. But how it is paid is different. What is that? So 150 into 10%, 15 minus input tax credit 10. So net 5 rupees is paid. Then what is the cost of purchase to C? 150. So even though C pays 165, that is 150 plus 15, but 150 is only the cost of purchase because the 15 rupees can be taken as credit by C, and 150, what is the value addition made by C? 30. So 180. 180 into 10% is 18 rupees, and already input tax credit 15 is there now. So 18 minus 15, 3 rupees will be their net liability that they will be paying. Again, if you see, C's value addition is 30 rupees. 30 rupees into 10%, 3 rupees is being paid. So here, what happened to the revenue to government? 18 rupees, which is literally 180 into 10%. 180 is the total value addition into 10%, 18 rupees, logical. And what happened to the cost to consumer? 198 instead of 226.6. How much is saved here? How much is saved? 226.6 minus 198. 28.6. Exactly to that extent, there is loss of revenue to government. So what is the revenue to government? 46.6 minus 18. So 28.6, which means government is losing its revenue to contribute it to the consumer. So that's why, like when GST came, lot of people said, price will come down, okay, price will come down, real it is 226.6, 198, price should come down because government is losing its revenue and they are giving to the consumer, and it is a measure to curb the inflation. GST, input tax credit system, because of that the price will come down. So this is nice, very good theoretically, but practically what happened? So whether we saw any difference? No, I did not see difference. See, I am also one consumer in India, and I have seen pre-GST, post-GST. I did not see any change in the price, and it is the same. Why? Because no trader is willing to pass on the benefit to the consumer. Everyone wanted to increase their profit. See the next table. So what A did, A no change, same, but B without credit, what was the sale price of B? Just see the first table, without credit, what was the sale price of B? 176, and that's what 160 plus 16, 176, means anyhow C was ready to pay 176 to B, yes or no? Now what B is telling, boss, he is ready to pay 176 to me, he was used to pay, okay. So like yesterday I saw one video of one MLA in Velacheri, okay. So the reporter is asking, sir, water and all came, so what is that your reaction, no, are you doing anything, etc. and all. I can't do anything, so nature's mistake it is, so rainwater is coming, what I can do? So the water, beach is not receiving, so it is throwing, so water is coming, okay. What we can do like that? Wow, so nice, no? Amazing way of explanation they are giving. It's like people are used to, like 2015 it came, 2023 it will come, so next year also it will come. So people are used to, they are telling very softly, they are telling, you know, as if you are for the first time seeing water, you are living in that only, na? Why do over action? Like that, already 176 he was paying, and let him pay 176, why should I give him a benefit? So 176 only I will collect. Okay, then previously you were paying the same tax, now also you pay the same tax. No, credit is available, no, for me. So 176 I will collect, but I will not pay the same GST. See there what happens, he collected 176, but 176, how much is the GST component in that? 10 by 110. How 10 by 110? That 176 is inclusive of 10% GST. So 176 into 10 by 110. So what is that? 16 rupees. But B is getting credit of 10 rupees. Why credit of 10 rupees? B purchased for 110. The 10 rupees he will take. Then 16 minus 10. He will pay to government 6 rupees instead of 16 rupees. Are you understanding this? Instead of 16 rupees, he will pay to government only 6 rupees, but he collected from the customer, so 176. Because of this, what happened to his profit? His profit increased by the 10 rupees. So profit went to 60. Got it? Previously, what was the profit? 50. B's profit was 50. Now the profit increased to 60. So exactly the 10 rupees, what they should have passed on as benefit, so they retained that benefit, because of which, you know, consumer did not see any great difference if C is the consumer. Now what C did, okay, so you did like this to me, na, I will also do the same to my consumer. So C, what was the price at which C was selling to D before without credit system? 226.6. So C collected the same amount, 226.6. In that GST is into 10 by 110, that is 20.6. And how much credit C will be getting? So this 16 rupees C will take as credit. So 20.6 minus 16, 4.6 only they will pay. So they will not pay full amount. Previously, so 20.6 is paid, but now only 4.6 will be paid. But they collected 226.6 from the customer. What happened because of this? The profit of C has increased. Actually, C's profit was only 30, but now the profit of C became 46 rupees. Okay, so C is telling to B, you added 10 rupees. No, I have added 16 rupees. Okay, so 30 plus 16, 46 rupees. Now, who is the sufferer here? So, ultimate consumer is the sufferer. He did not see any great difference, and the profit of the traders got increased. Sir, it is not a mistake, sir. Traders, why they should be giving benefit to the consumers? Now, which side you are, boss? Which side you are? Are you from the trader side or are you from the consumer side? That's where it is different. Okay. So now, if I speak from the consumer point of view, it is wrong. Where I should have got my benefit. Whereas if I speak from trader's point of view, no, whenever people is having the affordability to pay, why should I sell it for lesser price? If I sell it for lesser price, people will think that I am selling inferior goods, because today's environment is like that. You understood? If I am selling for cheaper rate, people will think, waste fellow, that's why he is selling at a cheaper rate. Maybe the quality is not good, etc. and all people will think. So therefore, why should I compromise? But government should be neutral for both. So what government is telling, boss, you increase the price, you increase the profit, nothing wrong, because we are in a mixed economy. But why are you increasing? Show me the justification. Are you really adding any value? Whether there is any change in the material cost, whether there is any value addition. Example, before, say, even rate of GST also this problem will happen. Like before, the rate of GST on restaurant was 18%. Thereafter, they reduced the rate of GST on restaurant to 5%. But the price of the dosa did not change. Previously also when 18% was there, masala dosa rate was same. Now also the masala dosa rate is same. So what changed here is the profit of the restaurant. So now government is asking the restaurant, okay, whether masala dosa size increased, or whether the cost of urad dal has increased, or whether the cost of potato to make the masala has increased. Why? You explain me why you have increased the profit or why you increased the price. So what is the reason? If you are not justifying, we will assume that you are trying to make profiteering by not passing on the benefit to the consumer. So therefore we will be levying on you an anti-profiteering order. So you have to pay that profited amount and the penalty, etc. So that's where they brought in anti-profiteering provisions. Okay. So in order to avoid this scenario, government has introduced anti-profiteering provisions. Clear? So increase in value addition to dealer A 0, dealer B 10, dealer C 10, 16, totaling to 26, which should have been passed on to the consumer. Out of this increased value addition, dealer shall pay tax, and due to which tax revenue to government also increases. Yes, instead of 18 rupees, the revenue to government increases, but not that great. So from 18 rupees, it went to what? Some 20.6, but it is not that great, but the compared to the profit which is made by these dealers. So you understood practically what has happened in input tax credits, and right now we don't have anti-profiteering authority. Previously we had anti-profiteering authority. The provisions are there, but authority is not there, because this anti-profiteering work has been assigned to CCI, Competition Commission of India. Previously it was NAPA, National Anti-Profiteering Authority, one separate authority they created, but now Competition Commission of India will look after this kind of scenarios. So therefore complaint should be made to CCI, Competition Commission of India. Then the next part is GST Council. So there is one query here, sir, non-taxable supply and no supply means the same. No supply means different from non-taxable supply. Non-taxable supply means it becomes supply, but there is no GST on that. That is non-taxable supply. Means there is no levy of GST on that, but it is a supply. Whereas not at all a supply means a transaction will not first of all come into the taxable event, because the taxable event is supply. So supply is defined under GST. So if certain ingredients are satisfied, then only it will be supply. For example, supply definition says any activity for consideration in the course or furtherance of business is supply. Any activity for consideration in the course or furtherance of business is supply. For example, I am taking classes for consideration in the course or furtherance of my business, so it is supply. What if I am taking classes but I am not getting any consideration? Free batch. Now in that case, whether it is supply? No. Should we write it as not a supply, or should we write it as non-taxable supply? Not a supply. It is not non-taxable supply, it is not a supply. It becomes supply, but we don't have to pay GST because there is no levy. Then it will be called as non-taxable supply. Then next, another query is that cascading effect and double taxation is same. Yes, cascading effect includes double taxation. Double taxation is one of the reason for cascading effect, and the other part of cascading effect is tax on tax. The same amount getting taxed twice is double taxation. That is also there, plus tax on tax is also there. In total only we call it as cascading effect of tax. Fine. So look into this GST Council, whether India follows dual GST model or single GST model. Dual GST model. Dual GST model means central government and state government both parallelly will levy the GST, which means can the decision be taken by only central government? No. Only state government? No. So a common decision making body was required, and that common decision making body is GST Council. And one conscious decision that Prime Minister has taken is that, so as we are unaware of this GST, taxes, all those things, it's better we should stay away. And even he told to chief ministers also, stay away. No, we should focus only on politics, okay. Next election, what we need to do, what kind of benefits we need to give to the people, about that only. So we should not think about these taxes, all these things. In a way it is good only, because we will not blame the Prime Minister for any decision, anything that happens in GST, no. So we will be blaming the Finance Minister, because in GST Council Finance Minister is only there, not Prime Minister. So all state finance ministers and Union Finance Minister will be part of GST Council. So total how many members will be there in GST Council? 33 members will be there. How 33 members? One Union Finance Minister, okay. Then 31 states, 28 states plus 3 Union Territory with state legislature. So 31 state finance ministers. And sir, what if the finance minister, you know, like don't know Hindi or cannot go and attend the council meeting? Can any other minister be represented? Yes, because they did not specifically say state finance minister, state ministers. So if finance minister could not go, maybe they can send a home minister, or maybe they can send education minister. I don't know here, okay, which state will do that. When the person don't know anything, why they will become finance minister also, I don't know. Maybe in India anything can happen, we don't know, okay. And because we have understood democracy by mistake as, you know, like emperors, how ruling and all happens. So we misunderstood actually. Democracy is not true democracy what we are seeing today, because we are seeing one person and voting. See, we should never see one person and vote. That is not called as a democracy. So it completely changed. See, it is like once upon a time one king, we trust the king and we will be, you know, telling, okay king, you come and occupy this kingdom. This king is bad fellow. You come and occupy. We are okay with that. That's how it was. But now we are seeing only one person and deciding, okay, so he is there, so we can vote. We should see in our constituency who is standing and is he a fit person or not. So all these things are there. That is what democracy means. But no, we lost it. So therefore here what happens in the every state, so one minister, but usually state finance minister will be part of this GST Council. So total 31 plus 1, 32, plus for 5 union territories, which are union territories without state legislature, one MP will be appointed to look after the revenue. So that union MP in charge of the state affairs for union territories. So that union MP will also be part of the GST Council. So that's where it will come to 33 members. Okay, see this. In total, there are 33 members in GST Council, one Union Finance Minister, one Union Minister of State Revenue, 31 state finance ministers. And basically what they do is that it's a decision making body of GST. And who will be the head of the GST Council? Union Finance Minister. But President constitutes the council. But President is not the head of the council. President will constitute the council. And the powers of the GST Council is derived from the Constitution. So it is not a government authority. Means when government dissolves also, GST Council will not dissolve. Government dissolves, but GST Council cannot be dissolved, because GST Council is not a government body. It's a constitution authority. So therefore, Article 279A of the Constitution empowers GST Council, and the President will constitute this GST Council. Finance Minister is its chairman, and Finance Minister of State will be its members. Union Minister of State in charge of revenue is also its member. And what is the job that they do? They take decisions and give recommendations to the central government and state government for the implementation of GST. Now, whenever they take decision, they need to convene a GST Council meeting. In that GST Council meeting, so what is the quorum? Quorum means what? Minimum number that should be present in order to call it as a valid meeting. So what is a quorum for a GST Council meeting? 50%. 50% means 33. 33 into 50%? That is 17. 17 members will be taken as the quorum. Quorum is minimum 50%. Okay. And whenever they take the decisions, so is it like an ordinary resolution or a special resolution? It is like a special resolution. Means what is the number of votes that they should be having in favor? 3/4. 3/4. That's what a special resolution, 75%. So 3/4 majority should be there, which means the votes casted in favor should be at least 3/4 of the votes casted against. Okay. And here these votes are not simple votes that will be taken, weighted votes will be taken. What is weighted votes means? Weighted votes means central government vote will have 1/3 weight and state government vote will have 2/3 weights. So it's weighted average that we take. So central government 1 vote cannot be equated with state government 1 vote. Central government 1 vote is given only 1/3 weight, means more weightage is given to state governments, which means, so here again the Union Finance Minister also safeguarding themselves. Prime Minister first escaped, telling that I don't know anything about GST, so Union Finance Minister only. Now Union Finance Minister also is telling, see boss, I am just the head of the council only, but my vote is having 1/3 weight only, and Union MP will listen to me, yes, because he is my Politburo Bureau member only, so therefore he will listen to me. He is a cabinet, my cabinet, he will listen to me. So we both together is 1/3 only. Just because we say something, not that everything will happen. So you ask your state finance ministers. You understood how beautifully, it is delegated. And now, so state finance minister, we will go and ask. He will say, Ayyo, I voted against only, but remaining states and all finance ministers, they voted in favor. What can I do? No, we cannot go and ask another state finance minister. Okay. So really they took one room on rent, sat and thought about it. Okay. So the weighted votes are 1/3 for central government, 2/3 for state government. Decision considered to be passed if 3/4 weighted majority is obtained. For example, you see this illustration. Proposal, increase the rate of GST on smartphone from 18% to 28%. That's a proposal. And in this GST Council meeting, so one Union Finance Minister is present, one Union MP is present, and 17 state finance ministers are present. Quorum achieved? Yes, 17 plus 1 plus 1. So that is 19. Quorum achieved, because 17 is the quorum. No? Then what is the total weighted votes? Total weighted votes. So one Union MP into 1/3. Then so Finance Minister 1/3, Union MP 1/3, 17 state finance ministers 2/3. So 1 into 1/3 plus 1 into 1/3 plus 17 into 2/3. So total weighted votes is 12. Understood how we got 12? This is the total weighted votes. In the 12, how much we should be getting as the weighted votes in favor? 12 into 75%, 9. 9. Weighted votes in favor should be 9. Then it is okay. Now, see this, voted in favor, Union Finance Minister voted in favor. Of course, she will vote. Good only, na, revenue increases. Okay. And one Union MP also will vote. Madam votes means sir also will vote. Okay. Then 4 state finance ministers, definitely, because madam will say, if you are not voting, I will not release funds for you. So naturally, sometimes, so whichever states which are under the central government ruling, So they will be agreeing, they will not have voice sometimes. So because of which they will be voting, and total voted weights in favor is 3.3. How 3.3? 1 into 1 by 3 plus 1 into 1 by 3 plus 4 into 2 by 3. So that will be 3.3 is the votes in favor. Okay. Now, will the decision be taken? No. Why the decision will not be taken here? 3.3 divided by 12. How much? 27%. Therefore, the proposal shall be dropped. So, which means who is having the power here? Decision making power is with the states, not with the center. So, if states have decided, so that is final, and therefore, don't believe in whatever state government is telling. That is what I am trying to convey here. Don't believe in everything what state governments are telling, because everything is politics. So, you are being brainwashed, and so know the reality. So, definitely it is not the central government alone. See, I am not against central government, I am not in favor of central government, okay. I am not a Sanghi, at the same time I am not against BJP or in favor of Congress and all, definitely. So, if at all I hate, I hate the democracy itself, okay. I like communism. I believe in communism, okay. So, I like that ideology. So, I don't like these two parties. What should I do? BJP also I don't like, Congress also I don't like. So, because and moreover I am not talking about the politics here, I am talking about the policy here, okay. So, I am just trying to convey it is not only the central government, even state government also, but the blame game happens here. State government will blame central government will blame state government. So, we are getting brainwashed. So, we need to know the reality. It only central government decides also, nothing can happen. So, state government has to decide everything. So, today whatever GST, the changes etc. that we are seeing, so it is not one sided. So, it is like state government also should have voted there properly. They should understand. So, educated people should go into the GST council, okay. So, I am not telling that those who are in GST council are uneducated and all. I mean to say, so they should be sensible, they should think, okay. Then, that is this example, maybe for a MCQ we may get a question like this. So, this many voted in favor, so what is the majority, like that, weighted majority. So, weighted majority should be how much here? 3/4 weighted majority, and how to count the weights? Central government vote will be 1/3 and state government vote will be 2/3. Then, what are the areas of recommendations by GST council? So, they will give recommendations related to, now what are the taxes and cess that should be subsumed. From time to time they will be telling what are the goods or services that will be exempted, and withdrawal of exemption, okay. Not only giving exemption, even withdrawal of the existing exemptions also. Then, apportionment of IGST, that is whenever IGST is collected by central government, so what frequency they will follow for apportionment to the states. Then GST rates also from time to time. So, they will be specifying the rate of GST, they will increase, decrease, and special provisions for Jammu and Kashmir, northeastern state. These are called as special category states as per constitution. So, any other issues related to GST. So, what are the special category states as per constitution? We have 11 states as per article 279A of the constitution. So, this 279A. So, we have 11 special category states. Please write down 11 special category states. What are they? M, T, N, A, Sam, H, U, J. Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim, Arunachal Pradesh, Meghalaya. So, that 8 states, northeastern states. This 8 is northeastern states. Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim, Arunachal Pradesh and Meghalaya, okay. So, it is like actually 7, but here that Arunachal Pradesh is also taken as a part of that, Assam and Arunachal Pradesh, and H Himachal Pradesh, U for Uttarakhand, and J Jammu and Kashmir. So these are considered as special category states for which always government will be following some special procedures to give the concessions, etc. and all. Okay, even in GST also we have certain concessions like threshold limit. Usually when you cross a threshold limit, you need to register. What is that threshold limit? Usual threshold limit for registration is 20 lakhs, and in case of goods it will be 40 lakhs, but for special category states the limit has been reduced to 10 lakhs. Same way composition scheme limits, like that there are some special provisions which will be given to them. So even in income tax also we have some special provisions for them under 80 IA, IBIC, that category. Even in section 10 also we will be having some special provisions for them. Then any other issues relating to GST as the council may decide, say for example like returns, how to file the returns, matching of credits, all those things are also will be decided, and they give recommendations to central government and state government. And GST network. So this GST council may be given as a short note question, maybe, not important short note question and all. So maybe at final level it is not important, at intermediate level it is important, not at final level. GST network, see, we need a sophisticated system for the purpose of credits, matching of credits, etc. because the main difference from the old system to the new system is input tax credit. In that input tax credit also, the major problem what government was facing is with respect to fake credits. Previously also we had credit system, but fake credits. So what traders used to do in VAT, so they will be printing some purchase invoices. They will print and they will say we have purchased this, and they would not have really purchased. They would have purchased everything in black, but that is unaccounted. But they will be printing the purchase invoices and they will say we purchased it, and whatever VAT that is mentioned in that we will take credit and we will pay the difference amount. So whatever to their whims and fancies they used to pay the VAT. And many cases, so court also will be in favor to the traders only. Reason being, so they will say, sir, we purchased, and what is the authenticity of this invoice, how to verify? Currency note means you see like this and you check whether it is currency, fake currency or genuine currency. How to check invoice? We don't know. We acted in good faith. This one stupid concept of acting in good faith is there in Contract Act. Okay, so we acted in good faith, so therefore we purchased. So what court also can do? So they gave the judgment in favor to the traders only, but the parties who are losing here is the states and the government. So for that reason, one main amendment that they made in GST is that matching of credit is important, which means if you want to take ITC, input tax credit, so whatever ITC that you want to take should be cross verified with your supplier liability. If your supplier has paid the tax, only then we will give credit to you. So because we want to eliminate the fake credits, then matching requires a sophisticated technology and network. So because I will be purchasing from 20 people, and whenever I am taking credit, so this credit should be cross verified with those 20 people written. So for that reason, they created a environment infrastructure, IT infrastructure called as GST network. So GST network is a special purpose vehicle and entity, so that has been set up to provide a shared IT infrastructure. So for providing the services to central government, state government, taxpayers and other stakeholders, and this GST network is hosted in a common portal. So what is that common portal? gst.gov.in. What are the functions of GST network? So GST network is like a single point contact between taxpayer and the government, central government, state government and the taxpayer, and banks and financial institutions. So for them, the single point of contact is GST network. So any communication with the government is through GST network. What is the first communication? Registration, correct? Then filing of returns, then payment of taxes, making application for refund. So all these are the functions of the GST network: facilitating registration, payment and assessment, forwarding returns, then computation and settlement of IGST, matching of credits, reversal and reavailment, matching of tax payment with banks, invoicing. Yes, we can make the invoicing also through GST network. So we have e-invoicing. Then MIS reports to various departments, management information system reports to central government and state government. So these are the functions of GST network. Is GST network a private entity or a government entity? It's a government entity, 100% government entity. Previously 49% was owned by government and 51% was owned by private, but thereafter they decided that 100% should be owned by government only, and it became a 100% government entity where 50% belongs to central government, remaining 50% belongs to all state governments together. Okay. Then we have GST Suvidha providers and application service providers. These people are authorized by GST network and the government for the purpose of facilitating the taxpayers. Suvidha providers basically like Suvidha Kendras. So whenever you want to get the registration done or return filing, you can go to these places. And then we have application service providers who will prepare the application to integrate your accounting software with the GST portal. There are many. So like you take Clear Tax, Taxman. So these people have developed a lot of softwares. So what these softwares will do, the moment you install the softwares, it will make a connection between your accounting software which you are using, which any accounting software, and the portal. So automatically the data will be retrieved from the portal and the matching and all will be happening. Even Zoho Books and all has an inbuilt tool itself. So wherein they will establish the connection with the portal and you don't have to log into the portal. 3B, GSTR1, everything you can file through the accounting software itself. So these people are called as application service providers. Then, so what are the various rates of GST that we have? So this we have multiple rates, but maximum rate of GST is 28%, but the maximum tariff rate is 40%. Effective rate 28, but to what extent they can go 40%, 20% CGST, 20% SGST. They can levy up to 40%. But today the maximum rate that is being levied is 28. Okay. So tomorrow when government needs revenue, they will definitely go beyond 28 also. Now more or less they will be bringing like all the goods into 28 category. That is exhausted. If it is exhausted, then what they will do, they will slightly increase that 28% category to 40% and all. Okay, I am not talking about compensation cess, that's a different story. I am talking about the regular GST itself. Okay, say India is going on a war. Whenever a country goes on a war, lot of cost will be involved. So at that time, so in turn they will put it on the public only. So therefore they will be taking it to like rates and all, they can increase. That's why they created this provision and kept, because at that time they cannot take a parliament approval, all these things. So 40%. So whenever they want to decide, they can decide and they can increase. Then benefits of GST. So this normal part, you already know what are the various benefits. Some humbugs also will be there in that. Elimination of multiple taxes and double taxation. So multiple taxes eliminated, but again multiple taxes created. CGST, SGST, UTGST, IGST and compensation cess. Okay. Previously we had central excise duty, service tax and sales tax like that. So now also it is the same, I don't know. And double taxation, elimination of double taxation to some extent, because previously also VAT cannot be taken as credit and adjusted against central excise duty. Central excise credit cannot be taken and adjusted against VAT. Now also SGST credit cannot be set off against CGST payable, and CGST credit cannot be set off against SGST payable. Okay, if I say that, no, people will tell like no, I am insulting government. So fine, elimination of multiple tax and double taxation. Creation of common market with common taxes and procedures. I'll agree to this to an extent, because now there is no disparity in the rates. So a product, whether it is in Tamil Nadu or Maharashtra or Uttar Pradesh, the rate is going to be the same. So the price is going to be the same because the rate is going to be the same. Previously we had different rates, so difference in the prices. So like Tamil Nadu, if you see rice was 1% VAT, and Karnataka it was nil VAT, and Andhra Pradesh it will be like 5% VAT. So lot of people from Andhra Pradesh used to come to Tamil Nadu and Karnataka and they will purchase the rice and they will be going there. So because in their state it will be 5%. So therefore this problem will not be there, and that is creation of common market with common taxes and procedures. Then boost to Make in India initiative. I don't know how, but we should, sometimes ICI also to please the government, so they will be keeping some points like this. Boost to Make in India initiative. Okay, we will assume. Then buoyancy to government revenue. That's true because lot of people are now covered under GST. So lot of people, in a way, it is like GST, they delegated the powers to central officers as well as state officers. For example, if I am in Nungambakam, one locality in Chennai, Nungambakam, I will not be covered under state GST officer, I will be covered under central GST officer. Suppose, if I go to somewhere little, interior of Chennai, so I may be covered under the state GST officer. Previously, it was very simple. So VAT, state officer only excise and service tax, it will be central officer. But now everything is same only. So we don't know who will be our jurisdiction officer. Sometimes the jurisdiction officer will be center, sometimes it will be the state. So that at the time of registration you will know. At the time of registration itself, they will allocate it under which jurisdiction it will be going. Sometimes they will allocate it to state jurisdiction, sometimes they will allocate it to central jurisdiction. State officers and all manageable, central officers not at all manageable. Okay, so they will not agree for bribes, etc. and all. You have to honor fully because they have targets. State officers and all completely, it is like they will sit based on experience, they will get the promotion, and till the retirement happily they will enjoy their life. State government will not put any kind of pressure on the tax officers. So but they will tell whatever you collect, transfer some share like that. Whereas central is not like that. Central is like they are giving targets. Like private organizations, bank employees, they are working. So this much target you have, this much notices you need to give, and you need to generate the revenue. Otherwise, your incentives will not be there. Promotion you forget. We will have some other people and all. So that's why, because as I interacted with many central officers, they will be telling, no sir, now we don't need bribes and all sir. So we further wanted more and more taxes to be collected and reported. So then only we will be able to get good promotions, etc. and all. So that's why what happened is that now lot of people are coming into the ambit of GST. They are voluntarily getting registered, started paying the taxes because they don't want this harassment from the officers. So therefore, when wider tax base increases, lot of people start paying. That is evident today. If you see, GST collections is rapidly increasing. So from month to month. So that is this. Next, enable the goods and services to be globally competitive. This I don't know. This again, really, I need to do research and tell how because of GST, our goods and services will become globally competitive. God only knows. Previously also ours was competitive only. Then eliminates cascading effect of taxes, true. So these are the various benefits of GST. Definitely you will not get this question. Then next area, GST compensation cess. So already we had an introduction to this GST compensation cess. So I gave you the background of this. Why GST compensation cess is being levied by government? To compensate the loss of revenue on account of implementation of GST. Okay, and this particular GST compensation cess is on all goods or only on notified goods? Notified goods. Whether that notified goods or services supplied in the state or any state. Any state. So whether it is interstate or intrastate. See this. Compensation cess is leviable on intrastate supplies and interstate supplies with a view to provide compensation to states for loss of revenue arising on account of implementation of GST. And mainly, so producing states will be having loss of revenue on account of implementation of GST. I told na, the same point I have given. And GST compensations is applicable across the country. And what is the period for which this will be levied? Compensation says how many years they have agreed to pay the compensation? 5 years from the date of implementation of GST, and it can be extended for a further period as per the recommendations of GST Council. Accordingly, it is extended up to 31st March 2026. Sir, after that it is over, sir. We don't know. Only when 2026 comes, we will know. Actually, this 2026 also they extended mainly because of COVID only. One mistake central government did. While drafting the GST Compensations Act, they should have mentioned we will pay the compensation to the states on account of loss of GST revenue unless there is any natural calamity, exigency, etc. That point they missed. So for that reason, COVID naturally revenue of the government came down. But what state said? You promised, no, you pay. You understood? You promised, no, you pay. So then central government was forced to pay that. So that's why sometimes drafting is very, very important, okay. And they should have mentioned this. And of course, no one predicted that COVID and all will come. At a time we will shut down for months and all, and we will sit and clap, light lamp, etc. and all. So no one thought, okay. So therefore, because of that, the revenue naturally came down. And when it came down, central government was forced to pay. And they were not having money to pay. So they have spent fully, lavishly they spent. Before COVID, whatever money they had, lavishly they spent. And COVID came out of nowhere. Now they have taken all the reserves available and they have spent. Even compensation says everything, whatever they are really required to pay to the government, state governments and all, fully they spent. Money was not there. From where they will be able to pay to the states? And states started putting pressure on the center. So like we don't need any benefit from you, at least you pay whatever the dues that you are required to pay to us. So finally, they have made arrangement with RBI and they have given funds to the state government, but now they need to recover that now from people. So that's why extended up to 31st March 2026. And lot of notified goods are there, but this is a list, just an illustrative list, but this is not the exhaustive list. So there are many goods which are covered under compensation cess. So the pan masala, and you know what is the compensation cess on pan masala? 140%. On pan masala, the compensation cess is 140%. Okay, which means 2 rupees pan masala means, so GST and compensation cess itself will be somewhere like 3 rupees, 4 rupees, like that. Okay. So like that, but even then our people will not stop, na? No, they will rub like this and they will keep it and what kind of idiots they are here. And even that is being promoted by Bollywood actors also. So the cess shall be levied on notified goods, pan masala, let them levy here, we don't have any problem, let them levy 2000% also, we are not consuming, na? So why we should be bothered? Pan masala, tobacco and tobacco products, coal. But this aerated waters, yes. So on beverages there is compensation cess, including the mineral water. Mineral water 1 liter bottles are there, na? Have you ever wondered why the price of 1 liter bottle is so high? 20 liter can is there, na? How much 20 liter can is? Bisleri itself we will take. Bisleri itself, not 30 and all, 90 rupees. Bisleri, the 20 liters can is there, na? That bubble top can, okay, 20 liters is 90 rupees, okay, MRP. And means 1 liter will be how much? 4.5. But what is the price at which 1 liter they will be selling? 20 rupees. So why they will say this can will be returned, that's why lesser rate? Nothing of that sort, because that bottle and all, how much for that? 15 rupees extra for the bottle. So it is actually compensation cess is there because these were classified as beverages. This mineral water will be considered as flavored water, and because of that compensation cess is being levied. But let them levy on sodas, we don't have any problem, like Pepsi, Coke, Thumbs Up, etc. and all, let them levy. But because of this, even on mineral water bottles also will come, this GST compensation cess will be there. So that is this aerated waters. Aerated waters is actually common for all the beverages, it's a raw material. Aerated waters means water where the process will happen, this oxidization process will happen. So that is known as aerated waters, which is a raw material, and on that there is compensation cess. Even motor vehicles, already I gave you in the last class itself, as to motor vehicles 50% we have compensation cess. This is just a list of goods, but don't assume that this is the only goods for which compensation cess is applicable. And computation, this cess is in addition to GST payable and computed on transaction value. So therefore, suppose if you take tobacco and tobacco products, for tobacco and tobacco products we have GST as well as GST compensation cess. So whether while calculating GST compensation cess we need to add the GST, no, we don't have to do that. So we will just take the value, on the same value we will compute GST as well as GST compensation cess. And what about the other indirect taxes if you have anything? So then we need to add those indirect taxes while computing GST, because GST is the last tax that needs to be computed. So while computing GST, any taxes, duties and cess by whatever name called other than GST should be included. Somewhere in your CA intermediate you would have studied it, section 15 subsection 2 clause A, any taxes, duties and cess by whatever name called other than GST should be included in the value. Okay. So therefore, if you take tobacco products, let's take the value as 1 lakh, central excise duty at 12.5%, GST at 28%, and compensation cess at 20%. Now compute the GST and compensation cess. How will you calculate? First, excise duty, how will you calculate? Central excise duty 1 lakh into 12.5%. So very simple, 1 lakh into 12.5%, that is 12,500. Then next, GST will be 1,12,500 into. So while computing GST, we need to add the excise duty. So 1,12,500 into 28%. It's not 1 lakh into 28%. 31,500. GST compensation cess, should we add this 31,500 in 1,12,500? No. So same 1,12,500 only into 20%. 22,500. Means, sir, can we add this 28 and 20 and together we can calculate? Yes, but in exam don't do that if you are getting compensation cess, because so this GST will be paid in a separate head and compensation cess will be paid in a separate head. So you need to show the computation always separately. Okay. So therefore, what is that we learnt? While computing compensation cess, GST we don't have to include, but we have to include the other indirect taxes, if any, or any other taxes into the value for computing GST. Then next, input tax credit. Can we take input tax credit with respect to compensation cess? Yes, we can take, but we should have the compensation cess in the outward supply. For example, on motor cars there is compensation cess. I am a dealer in motor car. Can I take compensation cess as credit? Because when I purchase the car from the manufacturer, manufacturer will charge with me GST as well as GST compensation cess. Both I will pay. Now, can I take GST as credit? Of course, I can take GST as credit. What about compensation cess? Whether in my outward supply compensation cess is there? Yes. When I sell the car to a buyer, will I be collecting compensation cess? Yes. due to that reason, I can take credit of compensation cess on my inward supply. Are you understanding? I am a dealer of motor vehicle. In my outward supply, there is compensation cess. So I can take compensation cess on my inward supply as credit. Understood? Now, you are buying the car and you are using it in the business of transportation of passengers. You are buying that car and you are using it in the business of transportation of passengers. Now you paid to me GST and GST compensation cess. Can you take GST as credit? Yes. Usually motor vehicle is blocked credit. But when motor vehicle is used in the business of transportation of passenger, you can take ITC. So therefore GST you can take. Can you take GST compensation cess as credit? No, because in your outward supply there is no GST compensation cess. GST compensation cess is not payable on renting of motor vehicles or transportation of passengers and all. So due to that reason you cannot take credit of that compensation cess, which means this compensation cess will be added to your cost of purchase of car, and on which you can claim depreciation for income tax purpose. You understood? So whenever you are not getting input tax credit, that input tax credit can be added to your cost, and on which you can claim depreciation under section 32, because of which you will get the income tax benefit. Okay. So therefore, whenever you are purchasing the car, GST component alone you can take as credit, and compensation cess you cannot take as credit, because in your outward supply there is no compensation cess. Understood? So input tax credit can be availed on GST cess paid on inward supply. However, the credit of GST cess paid can be utilized only for payment of GST cess liability. That's why this restriction. Okay. Then all taxable persons supplying notified goods should collect and pay GST cess except composition taxpayers. So there is some scheme called as composition scheme under GST. Rather than paying GST at the regular rates, GST will be paid at the reduced rates of 1%, 5%, 6% by a person who is opting for composition scheme. So those people who are opting for composition scheme, if they make the supply of these notified goods on which compensation cess is levied, they are not required to pay the compensation cess. So compensation cess not applicable to a person opting for composition scheme. Can you remember this? Compensation cess not applicable to a person opting for composition scheme. So this definitely will be tested in MCQ. Then how this compensation cess, like how the compensation payable to states will work, I have just given one illustration. You can see, say to Tamil Nadu, central government is going to pay the compensation, and what they will do, they will take the indirect tax revenue of Tamil Nadu as the base of 2015-16 revenue will be taken as the base year. So Tamil Nadu government should get a compensation from central government, and how the compensation will be computed is what we are discussing. First 2015-16 will be taken as a base year. In 2015-16, Tamil Nadu would have got some indirect tax revenue. What is it indirect tax revenue? Say 800 crores. 800 crores is the revenue of 2015-16 to Tamil Nadu. Now, you cannot compare directly this 800 crores because that 800 crores was of 2015-16, but naturally there will be a growth. Correct? Growth will be there. So therefore, for this 800 crores, you add a 14% growth rate. 14% is considered as the growth rate in revenue. Okay. But our salaries and all will not grow in this way. Yes or no? Whether our income will grow in this way? Definitely not. Where income is growing only in 5%, 8%, that range only, and which is less than the inflation. But here see, they are expecting 14% growth rate. So 800 crores plus 14% for 16-17, 912 crores plus 14%, 1040 crores plus 14%, 1185 plus 14%, 1131. What is this known as? Expected revenue or projected revenue. What it? Expected revenue or projected revenue. Now, projected revenue minus actual revenue is the compensation. You got it? Projected revenue minus actual revenue. This much they should get. 2015-16 we had old indirect taxes. Had we left with old indirect taxes, naturally 14%, 14%, 14%, it will increase. Because of GST, if it is not increasing that way, the difference only central government should pay to the state government as compensation. Now, from when GST is implemented? 1st July 2017. Means in 2017-18, don't take full year. So, compensation period is only from July, which means how many months we should exclude? 3 months exclude. So, 9 months we need to take. So, take this 1040 for 9 months. 1040 into 9 by 12. You understood why 9 by 12? Why? 3 months GST is not applicable. It is applicable with effect from 1/7/2017 due to that reason. So, 1040 into 9 by 12, 780. Okay. Now, same actual revenue also you change the same way. Actual revenue for 17-18 is 1000. So, 1000 into 9 by 12, so that is 750. Now, is there any shortfall from the projected? What is your projected revenue for 17-18 after 1st July? 780. But what is your actual revenue? So, which means the difference is 30. Will the central government pay that 30 as compensation? Yes, 30 crores as compensation. Then 18-19. 18-19, what is the projected? 1185. But actually 1240. Will there any compensation is payable? No, because their revenue has increased. So, no compensation. Then again, or will it be collected from them? No, no. Only one side, okay. It's not like you got excess, so pay it to central government, not like that. Then again 2019-20, 1351 and actually 1314. Now, will the compensation be payable? Yes, 37 crores. So, from this illustration, you need to remember few important points. Number 1, what is considered as the base year for computing the compensation? 15-16. And what is the growth rate that will be adopted for estimating the tax revenue? 14%. How to compute the compensation that is payable? Projected revenue minus actual revenue. So, then extension of time period for levy and collection of GST compensations is already we saw it got extended up to 31st March 2026. So, with this we completed introduction to GST, and one small area we have not discussed. You see that, but already you know that. Page number 9. Page number 9. On import of goods, are we required to pay GST? Yes. We have to pay basic customs duty. BCD refers to basic customs duty, and GST also we need to pay. Why we need to pay GST on import of goods? Because in the past we had CVD and SAD. Subsuming CVD and SAD into GST. So, due to that reason, we need to pay GST on import of goods, because in the place of CVD, SAD we have GST. But which GST? IGST. IGST will be levied, and SWS refers to social welfare surcharge. So, these are the 3 things that we pay on import of goods: basic customs duty, IGST and social welfare surcharge. Okay. Now, this IGST also the same way, whether it will be shared with the state government or it will be entirely retained by the central government, it will be shared with the state government. So, it is not completely retained by central government. Is it clear? So, then it will be shared with the state government based on place of supply? Yes. So, that is the reason why a person who is importing the goods needs to share their GSTIN, then only central government will know, so to which state it is being imported, so that they will be sharing 50% with that state. For example, I am located in Karnataka and I am importing in Chennai port. Possible? Possible, na? Bangalore. Bangalore. So, if I am located in Bengaluru, so I can import either in Chennai port or I can import in Mangaluru port. Okay. So, but Mangaluru port, compared to Mangaluru port, Chennai port is convenient for me, because Chennai port is the biggest port wherein I don't have to pay the freight and all for entire container. I can have the shared cost. In a container, so entire container cost will not be on me, because that container, my goods will be only say 60%, remaining 40% they will be giving it to another importer, so the freight cost will be shared. So this advantage I will be having, so that's why I will import it into Chennai port. Now when I am importing into Chennai port, I will pay customs duty, IGST and social welfare surcharge to central government, and I will bring the goods to Bengaluru. Now I need to file one document with the government customs department for clearance of goods called as bill of entry. This bill of entry will be filed by the importer. In that bill of entry, I need to mention my GSTIN. So when I mention my GSTIN, so based on the GSTIN first 2 digits, it is a state code. So central government will know that IGST 50% should not be given to Tamil Nadu, but it should be given to Karnataka. Are you understanding? That's the reason why in bill of entry we need to mention our GSTIN. So IGST, which is paid on import of goods, 50% will be given to the state of the importer, but not the state where it is imported. Got it? State of importer, but not the state where it is imported. Then on export of goods also, should we pay IGST? So actually exports are considered as zero rated. So zero rated for the purpose of GST means the burden will become zero. Not the rate of GST is zero, but the burden of GST will become zero. That is the meaning of zero rated supplies. For the purpose of GST, export of goods or service are treated as zero rated supplies, but not treated as exempted supplies. Okay. And if at all dutiable under customs, we need to pay duty. Otherwise, we don't have to pay basic customs duty. IGST, I told you the burden will become zero, and social welfare surcharge also not applicable on exports. Majority of the exports are exempted. Only few exports are dutiable, but imports are not like that. So majority of the imports are dutiable, only few imports are exempted. But when it comes to exports, it is completely contrast. Majority of the exports are exempted, only few exports will become dutiable. So then all other parts we have completed, and I am moving on to the next segment, segment 2. Okay. See, introduction is just the basics, so we need to understand. It is like a recap of whatever you have studied in CA intermediate, and supply under GST is the second segment. From this second segment onwards, so actually this is supply under GST. We have two sections. Section 7, meaning of supply. Sections 8, composite supply and mixed supply, which is CA intermediate portion. Okay. So that's the reason why I am not doing the bare act methodology and all in this. So we will try to understand, we will study this, but no need to read the bare act, because the focus of CA final is not on bare act here. It is on the understanding of this, because mostly application questions will be tested on that. So if you are not trusting me, you can see the ICI what they have given. Paper 5 in syllabus they will give, in the syllabus contents, if you see, case studies based on the following. What is that? Levy and collection of GST, application of GST, concept of supply, interstate supply, intrastate supply. So on these concepts and all, what they are going to test pa? Case studies. So that's why you don't have to break your brain in decoding the bare act, not required. So I am skipping that, but I am directly going to the analysis. Okay. So please see the summary given at the end. Page number 73 you take. And we will be moving back and forth. We will be moving back and forth, but I will be discussing from this revision. And wherever illustrations and all required, assignments and all required, we will be coming backwards. Okay. So please take page number 73. So page number you see on the top, that is only the page numbers. Below whatever I have given is for my reference. So because few pages I have, like summary, few pages, normal. For my reference only I made that. So on the top middle you can see the page number, that is the page number you need to refer. Refer page number 73. So we have two sections in this segment: supply, meaning of supply, composite supply and mixed supply. You might be knowing it, but even then I am repeating. Supply is a taxable event, and supply is defined under section 7. 7 subsection 1 includes supply, includes what and what is given in 7 subsection 1. Exclusions from supply is given in 7 subsection 2, and 7 subsection 1a talks about classification of supply into goods or services, and 7 subsection 3, central government on the recommendations of council is empowered to reclassify supply of goods as supply of services and vice versa. So 4 subsections we have. So mainly in this you need to remember 2 subsections: inclusions and exclusions in the meaning of supply. Okay, first we will see inclusions. Look into inclusion 7 subsection 1. So from the time you studied till now, so there is one more clause that is added. So at the time when you have studied 7.1a, 7.1b, 7.1c, only 3 clauses were there. Now they have added one more clause, 7.1aa. So total 4 clauses we have in the inclusions. First you read 7.1a. What does it say? Any activity in the nature of debts RLL. What is this debts RLL? D for disposal, E for exchange, B for barter, T for transfer, S for sale, R for rental, L for license, and L for lease. Disposal means sale only. Then sale is given. Then what is the difference between sale and disposal? Whenever the asset's life is over, thereafter when you are selling it, usually we call it as disposal. Means you don't need it. So when you are giving it, so you are not attaching much value to it, then it will be called as disposal. Usually disposal of waste and scrap, disposal of old furniture. So there we use the word disposal. Then what is the difference between sale and transfer? So both are transfer only, but if it is in pursuance of a contract, then we will call it as sale. Otherwise than in pursuance of contract, we call it as transfer. For example, there is something called as extinguishment. Extinguishment or relinquishment of title. So that is also called as transfer. For example, say you have taken insurance on a property, on a car, you have taken insurance. And what happened because of the floods in Chennai, so fully water has entered in the car. And without knowing that, you turned on the engine and the engine got seized. So then what will happen? Insurance company will say, okay sir, we will take all these parts and we will replace. Maybe it is covered under bumper to bumper insurance and the insurance company is ready to change it. So now the old parts and all they are taking now. So which means even though you are not selling it, but you are transferring it. So that is also coming under a transfer. Then next, say you purchased one iPhone 15 Pro Max and that iPhone 15 Pro Max, so you have given it to me. Sir, I purchased new phone, sir. I saw that and it fell down from my hand. It got broken. So now what you will say? It's okay, sir, only no, like that you will think? Definitely no. Sir, take that first and give me my money. Correct or not? I don't have the intention to buy, you don't have the intention to sell, but the sale has taken place. So therefore, that is transfer. So transfer is little broader. Even compulsory acquisition also will be coming under transfer. What is compulsory acquisition? So government will be forcing me to sell to them. So say government has announced one policy that they wanted to give free rice to people. So they are asking the rice mills to sell rice to government at 5 rupees per kg. Even though I don't want to sell at 5 rupees per kg because of the government's mandate, I need to sell at 5 rupees per kg. So that is known as compulsory acquisition. That is also coming under a transfer. So disposal, sale, transfer. You understood na? Next, exchange and barter. What is the difference between exchange and barter? Both involves exchange, but in barter, it is like exchange of goods for goods, goods for services, or services for services. That is what barter is. For example, so I will be selling you 100 bags of rice, in return you will be giving me 50 bags of wheat, so that is barter. Or I will be taking classes for you and you will be giving me so fruits, vegetables and all, so for my living, barter. Okay, I'll be taking classes for you and you in turn you need to do marketing for me, so that will also be barter. You understood? So exchange of goods for goods, goods for services, or services for services. But exchange is given separately. What is this exchange? Whenever we purchase a product, in exchange of the old product and pay the difference of price is known as exchange. For example, you buy a new TV, in exchange of the old TV and you pay the difference, correct? So for example, new TV somewhere 30,000 rupees, old TV you are giving for 5,000 and you pay 25,000, so that is called as exchange. The next, rental, lease and license, these three are not transfer of title but transfer of right to use. So these three will not come in the context of transfer of title. So transfer of title means sale, but transfer of right to use, for example, renting of furniture, renting of cars, renting of building, that will come there. So what is the difference between rental and lease? Rental and lease. So both are same, but whenever it is for a shorter duration, we call it as rental. For a life like 5 years, 10 years, 20 years, etc. and all, we call it as lease. Wherein major life of the asset is covered in the period, then it is called as lease. But temporarily when it is given, we call it as rental. License is the word used in the context of intangibles. Intangibles like copyright, patent, trademark, etc. When we are giving right to use, you pay the royalty, right? So that royalty will be called as license. Whether these activities are covered under supply 7(1)(a? No, no. Any activity in the nature of debts RLL, adjustum generis. Any activity, but it should be in the nature of this list. So what is debts RLLD for? Disposal, exchange, barter, transfer, sale, rental, license or lease. So any activity in the nature of these activities for consideration in the course or furtherance of business. So two conditions, it should be for a consideration, it should be in the course or furtherance of business. Then it will become supply under 7(1)(a). And that's where I gave you example. I am taking classes, activity, and for consideration, yes. In the course or furtherance of my business, yes. Therefore it will become supply under 7(1)(a). And you are having some old newspapers, and that old newspapers which is there at your home, so you want to clear it off, so you take it as a bundle and you go to an old newspaper shop and you are giving that newspaper bundle and you got some 500 rupees. So now this particular 500 rupees what you receive, is it activity for consideration? Yes. What is the activity? Sale of old newspapers. What is the consideration? 500 rupees. Is it in the course or furtherance of your business? No, it is not in the course or furtherance of your business. Therefore it is not a supply under 7(1)(a). One more example, you are selling your phone through OLX, okay, and you got some money by selling it. Again, activity, sale of phone. For consideration, yes. Is it in the course or furtherance of business? No, it is not in the course or furtherance of business. Again, it is not supply under 7(1)(a). Then, suppose if there is no consideration, I am taking classes and it is in the course or furtherance of my business, but I am not getting any consideration. So like say every 6 months I will be uploading rocket revision in my YouTube channel, and for intermediate also I will be taking lot of free lectures, okay. I will not get any consideration. Will it become supply? No, it is not supply under 7(1)(a), but it may become supply under 7(1)(c). So 7(1)(c) talks about activities, even though without consideration it will become supply. You got it? Only when it is covered under 7(1)(c), then only without consideration it will become supply. Understood the difference between 71A and 71C? 71A is only when there is consideration. If there is no consideration, you need to refer to 71C. No C, 71C. Okay. No consideration, refer 71C. Okay. So therefore, only when the activity is without consideration, you need to come to 71C. Otherwise, 71A itself will be applicable. Okay. Then consideration you should not understand as like something in written just like that, because last batch one student, when I told this example, he told me, sir, you are taking free rocket revision, sir. Because of that, no students will be coming to you in the next batch, sir. So CA inter you are taking free, sir. So they will be coming for CA final, sir. So which means there is consideration? No, sir. I said it is not certain. It is not certain. First they should be attending that CA intermediate free classes and they should be satisfied about my classes. Second, they should write exam. Third, they should clear CA intermediate. And they should come to CA final. In CA final, they should choose me only. How many uncertain events you know here? And at last, if they come, so there is no certainty, na? Every student who attended, so will be coming. No, there is no guarantee. So that is not consideration here. Consideration means there should be cause and effect. So certain, it should be certain. If it is remote and all, it is not called as consideration. Okay. Then 7.1 AA you see. 7.1A you understood now. What is 7.1A? Any activity in the nature of debts RLL for consideration in the course or furtherance of business. 7.1AA you see, and identify the difference. Any activity or transaction between a person other than individual and its members for a consideration. So in both places there is consideration. But 7.1AA is applicable in case of a transaction between a person other than individual and its members. For example, there is a firm which is providing services to the partners and partners is making payment to the firm, or in other way, partner providing services to the firm and the firm is making payment to the partner. So now it will come under supply 7.1AA. You got it? Between a person other than individual. Who is person other than individual? HUF, firm, LLP, AOP, BOI, body corporate, company, cooperative society. Okay. Person other than individual. We have person definition na. So person in income tax, you would have studied individual, HUF, AOP, BOI, like that list. Other than individual. Okay. So I am taking firm. And who are the members of the firm? Partners. So any transaction between them for a consideration, it will become supply under 7.1AA, which means, sir, partner getting remuneration from the partnership firm will become supply under 7.1AA. Will it become 7.1AA? What is your answer? Logically, yes. Because what is the word used? Any activity or transaction between a person other than individual. Between, either person to members or members to person. So for a consideration. So now it is a homework for you. So you need to search for this information. There is a partner who is getting remuneration from the partnership firm. On that, whether it is supply under 7.1AA and whether GST is payable, because this is going to become a big issue for many partnership firms, because by default partner will get remuneration from the partnership firm, whether they need to pay GST or not on that. And moreover, that will not be considered as salary, because partner is not an employee of the partnership firm. So salary, there is no supply. I am only telling you, salary there is not supply, but here partner is not an employee of the partnership firm. So that's why, so this will not come under salary and it is not excluded from supply. So will it become supply and will it be chargeable to GST? You need to analyze this, research this and come for tomorrow's class. Okay, we'll continue from there in tomorrow's class. Thank you, we'll meet tomorrow. And one second, there is one question here. Sir, who will fix 14% projected tax revenue? So it is like GST Council. All the states have decided as to this much percentage can be projected tax revenue. Thank you.